What's up, guys? Welcome back to DCA. So what we're going to do in this video is take a look at this critical price level that we're sitting at right now. We are at $30,500 at the moment, and I'm going to talk to you about why this price level and the coming days and weeks are going to be so important for this market. My channel was one of the most bearish channels on all of YouTube all the way back to the beginning of 2022 and really at the end of 2021. We were talking about how we had crossed significant price levels, which indicated to us that it's very likely that this market was running out of steam. And, based on a lot of the things that the Fed was doing at the time, it looked like we were heading into a bear market. So even when we were having some of these larger recoveries, we remained bearish on the channel, saying that, it really looks like, based on everything that we know about how markets function, it is going to get ugly out there. And sure enough, we eventually found ourselves down at 16K. Now, as you may know, we do a lot of on-chain analysis on this channel. And the reason for that is I believe that price analysis, technical analysis is great, and it certainly has its place. But ultimately, being able to look at the open ledger and understand how market participants think and function around this market, that is ultimately what's going to give you the edge. Because understanding the dynamic shifts between short-term holders and long-term holders, that fundamental shift between those two cohorts of investors has showed us time and time and time again how the market is going to evolve over time. With that said, guys, if you're new to this channel, what we do here is data-driven analysis of the cryptocurrency markets. We don't engage in hype. We don't engage in hopium. We've actually just launched a website with the guys over at Upside Down Data called polaritydigital.io. We offer a wide range of models that can help any type of investor, whether you're a short, long, or medium-term investor, a swing trader. I think we have a lot of different tools there that can help you improve your knowledge about these markets. So you could check that out at polaritydigital.io. So with that said, guys, let's get into it. Okay, so in our most recent video, we talked about the fact that basically where we were sitting at around 26K at the time, we were looking at the distribution of short-term and long-term holders and showing how these markets can rapidly move. So when you see these large candles, these tend to be through zones where there are very few longer term or shorter term holders. Now, we also said that you could see ourselves rapidly wipe out resistance zones, especially to the upside, rather quickly if there's any kind of positive news, because we've seen it time and time again. These massive candles occur and they just slash right through any sort of resistance zones. And the BlackRock ETF was that sort of catalyst in this case. So some of that news came out. The sentiment behind Bitcoin got very bullish, and from 26K up to 30K, we just sort of slashed right through all of that resistance. But as we've said, there is resistance sitting up here at around the 30 up to around 32K zone. Above that, though, it sort of clears out. So I've kind of made the claim that if we're able to break above that 32K zone or 31.5, if we're able to break above that zone, there's simply not a ton of resistance above us. But first things first, we need to get above that level. Now let's take a look here why this zone is offering so much resistance. So it's not so much in this case the number of holders at this level that are causing the resistance. It's more so the fact that, as we stated in that prior video as well, this is an exceedingly important price level. So this zone right here acted as an area of support throughout the entirety of the bull run. All right, so back here in January of 21, then again all through this major capitulation that we had after May of 21. So you basically saw May all the way through July, this was a support zone. We approached this zone yet again in January of 22 and then collapsed below it. And then that's when we had our big collapse, our initial collapse that sent us into this eventual 16K price. So this is a very important level because, as we all know, once you lose a major support level, it very likely becomes a resistance level. And that's exactly what this zone right here has been. And that's why you're seeing us struggle to get above this level right now. All right. So what I want to do to start with is to take a look at another critical level that is also going to likely act as somewhat of a resistance zone. But I want to show you why once we get above this particular zone, we could very well be off to the races. Okay, so we're going to start just quickly by looking at the 20-week moving average. I think this is one that everyone is very well aware of, right? So this line in white, we've said a lot of times on the channel, this in general is a good gauge of current price market sentiment. And why is that? Well, we've shown a lot about the short-term holders on this channel. We've talked about short-term holders, and these guys tend to be the ones moving coins every day. They are going to be the primary source of volume in the crypto market. And so we've talked a lot about this, and we've showed that what is the 20-week moving average really? And if you really break it down, the 20-week moving average is essentially the short-term holder cost basis. The 20-week moving average is basically a representation of whatever cost the short-term holders on average own Bitcoin. And so if your number one volume mover on a daily basis is your short-term holders, well, as it turns out, that is a very good way to gauge market sentiment. And so what we can see is when the price is above this short-term holder cost basis, it tends to be a bullish market. And when it is below, that tends to be a very bearish market. So as you come back up to the short-term holder cost basis, so in other words, the average price which short-term holders own the asset, you tend to find that is a resistance level, because if things are looking ugly in the market and you're down 50%, so at this point right here, back in March of 18 as a good example, the price at which they owned Bitcoin was around 11K, and we dropped all the way down to around 6,600. So when we came back up here to around 10K, which was their new cost basis, because on average a lot of people bought here, people are going to take profits. These guys that bought down here at 6,600, and these guys who bought at 1,100, who were down nearly 40 to 50%, they are going to just get out. They're going to take their money and run. So they'll take that small loss rather than that huge loss that they were sitting on. Okay, this is a very good way to gauge where the market is at in general at any time. So let's take a look at another important level then. So now we've pulled off that 20-week moving average, and now we're looking at the 100-week moving average. All right, and this one may not be as obvious, but I think something becomes very clear here. Where is it that we get below this 100-week moving average? And we've seen this happen now multiple times. So what we actually see is we kind of have a similar type of event play out in each market cycle. We have this event where we sort of go crashing below the 100-week moving average. We shallow out, and then we start this accumulation phase where we're shallowing out, kind of moving up and down with no particular direction. And then we go on our run. We start to gain traction on the 100-week, get above, and then go on the run. We saw that exactly play out like that here. We collapsed below the 100-week, we shallowed out, and then we started this accumulation into our run as we got above the 100. Now, in this case, mind you, we did have this black swan event where we broke below again. But what we saw is that same sort of pattern where we had a collapse down, a shallowing out, and then a slow accumulation back up. Granted, it was slightly more protracted in this case. The series of events played out over a longer time period. But when you look at these three events, they tend to look very similar in the way that they occurred. What you'll notice though is in this case, we got above here. And in this case, we got above in November of 2015. Here was May of 2019. And now here, where are we at? Well, we are sitting just below this very important level. And if we just look at this here, now you'll notice this 100-week moving average is slowly declining, but let's just look where it's at. I don't think it's coincidental that we are sitting here right at this important level, which also coincides almost exactly with this important support level. So this is going to be a true test. And you'll notice, how has this happened in the past, guys? Exactly like you're seeing right now. This 100-week moving average was sitting exactly at an important resistance level for the market. You'll notice that this level right here acted as a strong level of support. this 6,300 price level acted as a strong level of support all through the bear market, right? And then that is kind of right where the 100-week moving average met the price. And it's no different back here. You'll notice that this key level right here, where this transition occurred, this support level, and then this resistance level was also exactly the location where the price met the 100-week moving average. So you are seeing the exact same thing play out almost identically to what we've seen in each prior market cycle. And I think this just coincides with a lot of the things that we've been talking about. Now, one of the reasons I enjoy analyzing the crypto market so much is because it's heavily retail dominated, and the retail market acts in a predictable manner. The way in which they interact with the market is very predictable, because since we can see exactly how investors are positioned, essentially it's a study of psychology, and we are able to understand the psychology of the retail investor. And so it's why you see these patterns like this, like right here and like right here, play out in a very predictable and repeatable manner where, we're meeting the 100-week moving average after coming off of a massive capitulation at the same exact location where a huge support slash resistance level was throughout the bear market. These things are just very predictable because of the distribution of investors in this market. Now, obviously, institutional investors are becoming more involved, especially with Bitcoin, but at the end of the day, this is still a heavily retail dominated market. Okay, so the last thing I want to show you is kind of the interplay between these two metrics that I've put up today. And just to show you sort of how it's all happening exactly like it has in the past. So, what we see here is the 20-week moving average in white, and then in yellow, we have the 100-week moving average. You'll notice the price collapses below this 100, like we said. It gets below the 20 to sort of indicate that, short-term sentiment is very poor. And then once it drops below that 100, that is the longer-term holder sentiment becoming poor, which eventually moves into your accumulation phase. Now, notice that the way that every bull market starts, the 20 drops below the 100. Okay, so that's going to be like right here. 20 drops below the 100, 20 drops below the 100, and then yet again, predictably, the 20 is going to drop below the 100 right there. We crash below that 100, we have our accumulation. Then the price goes and moves above that 20-week moving average in white, right? We see it here, here, and now here. We hold that level as an area of support like we've done so far. Now we're coming up against the 100. And notice what happens in each cycle once we've been able to get above that 100-week moving average. That is what has started the eventual move into the bull run. All right, so like right here, like we saw back in the beginning of 2016, then like we saw right here in May of 2019. Now we did, like we said, have the COVID collapse, but we quickly corrected that and then got back above. And now again, we are sitting right at this level, at this important, critical price level. This is why, in my opinion, this is going to be a very important level to watch. I think if you're still watching crypto YouTube and you're still in the market and you're still dollar cost averaging every week, this should be the exciting time for you. I understand trepidation. It never seems real until it's real. Let's put it that way. And that's coming from experience. It never seems real until it's actually real. So, I'm not going to sit here and tell you that we are necessarily going to break above this and, the bull market is definitively back on. But as I've been building a case all through 2023, showing you why it looks like, this thing and that thing and the next thing are all kind of coming together. A lot of the on-chain metrics, a lot of the price analysis, a lot of this stuff is coming together to sort of tell us that there is a fair chance that this market is preparing to start its move to the upside. So if we're able to break above that 100 week moving average, I've already laid the groundwork for you for why that could see us go on a nice run because, look what happened in each case when we got above that 100. It wasn't necessarily right away that we exploded above, but over the next coming weeks and months, we did go on a fairly large run, like here, and now we're sitting here. And I've laid the groundwork for why that could potentially happen here. Because if we get above that 32K level, we have already shown you that, there isn't necessarily a lot of resistance all through this zone because a lot of these people that bought during this time, first of all, we didn't spend a ton of time down here in these levels. These levels, like right here, we didn't spend a lot of time in this 32 up to around 39K zone. And so there just aren't a lot of holders there. So it's sort of a free and clear zone where we could see our price go on a big run if we're able to get above that level. It doesn't necessarily mean we will, but at least the foundation is in place for that to happen. So breaking above a critical level, in addition to the fact that there's not a lot of resistance above us, could see the price go on a big run. Okay, so what we have here are the halvings marked out. And now we have the 100 and the 20-week moving average again marked out. The 100 is in white this time. All right, pink is going to be our 20-week. And what you can see is our halving marked here, our second halving, July 9th, 2016, our third halving, May 11th, 2020, and our fourth halving is expected to happen around the end of April or the beginning of May of 2024. So I want to show you the point at which, we had this capitulation, then the accumulation phase, and then the break phase. So we broke above the 100-week moving average first, right back here in November of 2015. How long was it until that next halving? Because a lot of people make the case that, price sentiment won't get bullish until we get to the halving. Well, we actually broke above that 100 week around 36 weeks or around 250 days prior to the halving. And remember, the price action was bullish during that time. Now, a lot of it in this first market cycle was kind of sideways action, but in general, it was up, sideways, or up. Then in this second cycle, how long was it until the halving when we first broke above that 100-week moving average? And in this case, it was about exactly a year. So 371 days, right? 371 days until we got to that halving. And in this case, again, it was a more mixed bag in this cycle, but we broke above that 100-week moving average, had a big run, and then kind of went sideways and had the collapse with COVID. And again, black swan event, global lockdown, take it for what it's worth. Now, where are we at the moment? So we are right in that same kind of time frame. We're sitting at the 100-week moving average, and we are 308 days or so out from the next halving. So it is not inconceivable that we are in the midst at this moment in time of beginning the next bull run exactly like we have seen in these prior two cycles. And, I think I've laid out numerous reasons why in this just single video. And, we've made lots of other videos explaining this in much further detail. But I think I've laid out why it is that structurally this market is beginning to show all of the signs of a market that is ready to go into the next bull run. Okay, so, this is an exciting time, guys. And this is what all the tiers, this is what they culminate in, is this kind of period right here where, we are potentially at a point where we could see the price really start to move and really start to take us to the next level. So if you've been accumulating during this time from July until January of 2022 into 2023, when everyone was telling you, hey, don't invest in cryptocurrency, that's so stupid that you're doing that. Well, now is the time for you to sit back and reap the rewards potentially. So it's an exciting time. And I think this is a very important level to watch. In fact, one of the most important levels that we've been at basically since we kind of had this first collapse down with the Luna UST event. So that's going to be it for this one, guys. Until next time, as usual, see you.